Hello traders and welcome to a new day trading strategy video of mine. In today's video we will be going over supply and demand runs within the order book and how to exploit them. Two things before we start. One is that on Wednesday we will be having a live Q&A with an informal trading session. So that'll be pretty fun. That was Patreon suggested for the Monday video today, but that will be pushed to Wednesday and yeah, Q&A. So that'll be interesting. Second thing is, as you can see, I'm not using webcam here because we are going to be looking at the order book, and I found that the webcam kind of got in the way of the order book sometimes here. This is the Bitfinex order book, and this is the GDAX order book, the two biggest exchanges for Bitcoin. Okay, so let's begin with demand and supply runs. So you may have noticed that when price goes up, typically you see a lot of market buying, and you also see a bid wall form. And when price goes down, you typically see a lot of market selling and an offer wall form. And these occur because of the dynamics of supply and demand. When something is high in demand, typically the price will continue to move upward until demand meets supply. And when something is high in supply, typically price will be moving downward until supply meets demand. We can exploit these types of dynamics within the market by trying to get our orders filled and also to scalp the market in the very short term. So let's begin with looking at the order book dynamics. So there will always be a demand run followed by a supply run, and this is pretty important. You're going to find a lot of situations, I know I have, where you want to buy at a certain price, let's say a Fibonacci retracement of 61.8, but demand picks up so much that the large bid wall that moves upward with price begins to form, and you can't really get your limit order filled because everyone else wants to get their limit order filled. And B, market buying isn't really an option because there's already been so much market buying that the price has already gone upward. That is known as a demand run. So what do we do in that situation if we want to buy? Well, simply we want to wait for the supply run. We don't do anything. We don't try to trail the order book like many bots are going to try to trail the order book, which is going to put your limit order at the top of the order book as price moves upward. Instead, we're going to wait for a supply run, so waiting for that selling to begin to occur and waiting for that offer wall to form up, put our limit buy order, and then get our order filled. So why do these supply and demand runs form? Well, it's actually the strength of a supply run or the strength of the demand run versus the other that dictates all of price's movements, and that's why they form. So you might have in an uptrend a series of very strong demand runs as there aren't many offers here. As there aren't many offers, there are many large bids and many market buys. So this would be an uptrend with the period of a demand run. And the other thing that you would have is a supply run. So you can have a strong or you can have a weak supply run. This is where you're going to have that large offer order, many market sells, and small bid orders. A weak supply run would probably have a small offer, not many market sells, or many market sells, but the price isn't really going much lower, and also decently sized bids. That would be a sign that the supply run's not too strong. One more thing that I want to mention on these demand and supply runs is that during the beginning of this demand run, it's going to be quite hard to fill your buy order as demand is high, and this is what I mentioned before. But to add on to that, during the end of a demand run, it's actually going to be very easy to fill your buy order because that's the transition between prices in high demand, it's going up, and then eventually it's going to be high in supply and it's going to come down. And if you try to trail the order book, what's actually going to happen is the minute the price begins to go down, you will be filled. When price could actually go down to here, and you're missing out on many better spots to fill. So what we want to do is, like I had said, put our limit buy order out when we see a supply run and put our limit sell order out when we see a demand run. Now again, we don't always want to do this. We only want to do this when it conforms to our strategy. So if we think that at the current price area that we want to buy in, we probably don't want to use a market order, but instead we can use this more of an advanced technique. Wait for a supply run as sellers begin to sell off, and then try to get our order filled, and vice versa for trying to sell or to short. And same with the offers. During the beginning of a supply run, it's going to be quite tough to fill your sell order as supply is high. You'll probably see price going down quite quickly, and you'll be tempted to market sell. But you don't want to market sell there. That's probably going to be the end of the short-term downtrend, the end of the short-term supply run, and B, you're also going to encounter fees. When in reality, you could just wait for that down move if you want to sell, wait for a week up move with that demand run as a bid wall forms, and then just put your limit sell order, and it'll probably be filled. Okay, so the third kind of market state that we have before we go into the more fun part of this video is equilibrium, and this is where demand actually is equal to supply. So this is where we have an equal number of market buys to market sells, and it's typically just going to be short-term consolidation. So periods like this, as you can see here, is where just about demand and supply are equal and no one's really winning. And then we had supply was much greater than demand with here, and now demand is greater than supply. But you're going to have these short little periods here and short little periods here where demand goes up, demand is finally equal to supply, and then supply is greater than demand, price goes down, demand is equal to supply is equal to demand, and so on. And as we actually just seen right before, we had seen that little demand run, and now we're seeing a supply run. As price moves downward, we're seeing a large string of market sells, and we see a decent sized offer order here, and really not many bids. So this is going to be a textbook supply run. And if we wanted to buy into the market, what we could do is place a limit order anywhere around here if we think that we want to get filled. You could also use a short-term Fibonacci, so something drawn from like here to here and try to get filled like that. But what you could also do is wait for these orders to be taken out. And if these guys begin to be market sold to, as you can see we have a period of market selling, if this begins to be market sold, then you could wait for price to go lower, then put your limit buy order and try to get filled at a pretty good price. But you can see we're in a supply run right now, and we'll see when that supply run changes into a demand run. So it's going to be these just constant dynamics of supply and demand runs, and like I've said many times, it's the strength of that supply run and the strength of that demand run that really matters. A very strong demand run is going to have not many offers and a lot of bids, so price is going to be skyrocketing, and that's why price goes up in dynamics-wise. So yeah, just to reiterate here, the best price spot to buy in is at the end of a supply run. So what we actually just looked at here, if you think that this is the end of the supply run, then yeah, you would just put your buy order here. But if you think that there's going to be more market selling and that supply is much higher than demand, then you can wait for something like this. Price is selling down, which is good. Prices are getting cheaper, quote unquote, and you can try to put your buy order around here. But what does it look like when a supply run turns into a demand run? Because that is eventually going to happen in this market. Well, what you're going to see is about the majority of these offers are going to disappear because they will be probably canceled or potentially filled. You're going to see bids beginning to pop up very, very quickly and in very high numbers. And then you're actually going to begin to see a period of market buying as retail traders begin to buy up those prices. And that is where demand would actually be overtaking supply. But before we get that, we're going to see this supply run, and then we're probably going to see a period where supply is equal to demand. And then we're going to see a period where demand is higher than supply, and then price will move higher. So finally, the last thing that I wanted to add to this before we go into some order book dynamics, is to talk about, you can actually use order flow to do this as well, to look at supply runs and to look at demand runs. So we're going to use two tools, the book counter, and we're going to use the trades counter here. When we look at the trades counter, this is going to show us how strong, not exactly how strong, but how much volume has been transacted on a supply or demand run. So if this is very, very red, if this bar is like here and this bar is like here, this is volume under 1. This is when 1 is greater than the volume. When this is like here and this is here, that will be evidence that the supply run may be ending soon, right? Because many traders have already market sold. And if this was here, and this was here, and it was a large period of market buying, then that would probably be the end of the demand run, as everyone who wanted to buy has bought in the short term, and demand switches over to supply. So that's how we use this tool, just to gauge where we're at with the demand run and where we're at with the supply run. Here's the book counter, and this is going to show us something known as the bidding pressure or the asking pressure. Ask and offers are the same thing. It's just a term for the limit sell orders above price. So right here we see we have more bidding pressure than offering pressure. We have 37 Bitcoin attempting to be bought, 30, it's going to switch around a lot, with only about 8 trying to be sold. So that's just another tool that you can add to your supply and demand run analysis when you want to get your orders filled, or if you even want to try a hand at scalping the market, if you think you can manage that. Okay, so that's going to be it for the first part of this video. So just before we go into the longer portion of this video, what you need to remember is a few things. That the most important let me go here. The most important detail of any demand run or any supply run is how many bids there are. And I do want to say that the strongest types of bids are going to be the bids at the most available price. So something like this. These bids are known as weak bids because some of them might be spoofing. Spoofing is when you put artificial buy orders up to here so that you can influence price to go upward to potentially fill your limit sell orders. It's illegal in most markets, but institutions and HFTs will do it in crypto because crypto is unregulated. So this is the most important, as you can see, because it's directly, if anyone market sells, you're market selling to these. So these are not as important. They could be spoofing, they could be real, but these are for sure real. Unless this gets canceled immediately, which it probably won't, these are actually limit buy orders that represent high demand, as there's high demand for price to go upward. So I'm going to expect that this demand run is likely to continue and we'll get a period of market buying. Because we have many weak offers, we have very strong bid at the most available price. So that's the most important part of looking at order book dynamics and looking at this supply runs and demand runs is those bids. The second most important is, of course, the market orders. We want to see retail traders market buying in the short term, propelling price upward. And finally, we want to see those small offers, also known as asks. We want to see not many offers out so that price can just cut through those offers. Because again, if we see just many offers here, it's going to be much harder for price to cut right through that, right? Okay, so with that in mind, let's now do a live look of a little bit what we've already done at the three types of market states within these runs. So we have supply run, we have a demand run, and then we have equilibrium, right? And this is going to be happening like within the minute, within 20, 30 seconds, with the change happening within a few seconds probably. So I think it goes without saying what kind of market we're in, but I'm going to ask you guys first after you've heard this video. Does this look like a equilibrium, supply run, or demand run? And I'll give you guys 5 seconds here. Yeah, so I think that this is pretty clearly a supply run where supply is greater than demand in the short term, and then we're going to see price go lower as we get market selling. But the interesting question here that gets a little bit more complicated is this a strong supply run or is this a weak supply run? A strong supply run is going to have really not many bids. It's going to have a massive amount of offers, and again, it's going to have many market selling just one after the other very, very quickly. That would be strong pressure to the downside, a strong supply run. This supply run to me actually doesn't look too strong. That doesn't mean that price isn't going to move lower, but I'm thinking that this kind of supply run doesn't really look like something that's going to immediately cause price to go down to here. I'm expecting another demand run to propel price a little bit higher. So maybe we go down, cut through these orders, and then we get this demand run to begin to pick price up. Or we might even see a short-term reversal where we get all of the offers that are taken out of the market, and we get a bit of a demand run. But now let's look at the Bitfinex order book, because we've just been looking at the GDAX order book, but this is going to be showing us something very similar. All right, so when we look at the Bitfinex order book, we see a few things. I'm seeing a good amount of market selling, so this could indicate a supply run, right? But now let's go down to the bids and the asks. And also this is known as the depth chart. This is just a visual representation of the order book here. It looks like order book wise, we look to be at about equilibrium. Maybe we're going more towards a supply run to the downside, but it seems like a slight equilibrium at 92.11. But we'll see if the offers begin piling up at the most available price. And now we see this. We're seeing rapid price movement. So maybe we'll be transitioning from, as you can see, we're at 92.30. Price just went up to 92.30 and 92.30, and then we begin to get this heavy selling, as you can see here. So it looks like we had a very short-term, I wouldn't even call it a demand run, but price went upward, and then we have this large supply run, as you can see here. And if you guys had noticed that, you might want to actually rewind this video. We had a large offer wall pop up here, and then we also had a long period of market selling. Sell, 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 as you can see here, as price was going downward. And that caused that supply run right there, as you can see. Okay, so that was the Bitfinex order book again. But I will say that I think it's much more clear. The supply runs and the demand runs are much more clear on GDAX. So if you're new to order book dynamics, and if you're new to analyzing these short-term fluctuations of demand and supply, I'd recommend heading on the 1 minute and then just taking about an hour or two to practice looking at these kinds of demand run, supply run, and equilibrium. Because if you can actually get very good at this, it's going to give you two advantages. One, you're not going to be making the mistake of filling your buy order here because you put your limit buy order at the most available price, it fills here. You're actually going to begin to fill your limit buy orders around here, which could even offer you on GDAX some really good short-term scalping opportunities. And the second thing that it's going to give you is not just scalping opportunities, but like I had said, good prices to fill your orders. If you think that this is a 61.8 Fibonacci and looks good, you don't buy here. You're not going to market buy and carry the fees. You're not even going to try to limit buy. You're going to wait for this supply run. It's fine. If you miss this supply run and you begin to see demand pick right back up, then you're going to have that know-how to say, okay, so it looks like we're currently in a demand run. Let me wait for a supply run. Then you'd have another opportunity here as supply went down and then supply met demand here when we had equilibrium. If you had missed that even, we had a demand run here, then this would be another opportunity to buy into the supply run. So currently it looks like buying would be quite tough, and it looks like we're beginning a demand run. Because you can see that we have a large bid order here, but what I want to see is, I want to see a heavy period of market buying, and then I want to see this bid wall moving upward with price. If I can see that, then it looks like that the demand run is off. So as you can see here, it does look like we had a large portion, I'd say about a third of that wall had moved up with price here, and the rest had just stayed right there. So that could be indicative that this is not a fantastically strong demand run. This could just be, continued consolidation. And these kinds of dynamics with looking at these demand runs and supply runs aren't just going to give you this short-term, filling or even short-term scalping, but it's going to help you even when you zoom out to, more, if you trade every few days, with a holding time of like 30 to 40 hours on average or something like that. Stuff like this is still going to help because these short-term dynamics are more important than many traders think with the long-term picture. So yeah, going off that, it looks like we still have that demand run is still intact, but it's going to be quite interesting to just watch this order book for GDEX and see if we can actually spot when demand meets supply, and we can actually gauge when we'll get a supply run. So if we wanted to sell into this market, I would say you do not want to put your limit sell order yet. I think you'd probably want to wait for price to cut through these and then maybe place your limit sell order around here because it looks like demand is still high, but it might be able to cut through these and you might be able to get a better price. Boom. Just like I had said, price cut right through them. Then maybe potentially you could have put your limit sell order before all these guys did at 9234.5. Yep, so you could do that now. Now this is interesting. If you guys had just noticed that, we had a short period where there were just as many bids as there were offers, and then the bids suddenly vanished. And that transitioned us from a demand run into a supply run. And now it looks like supply is picking up, but then demand is still fighting back. Let's take a look at the Bitfinex order book to try to get more confluence. So here it looks like we have stronger demand than supply. And again, I've said this before, but you can more or less ignore the order book below the most current price because this could be spoofing, and you can kind of ignore the offers below the most current price because that could be spoofing. I'm just interested in the most current prices. Maybe these guys here, the top three closest to the price, but below that, those orders could be canceled. Those orders could be, a lot of things could happen to those. But moving bid walls and moving offer walls give you a very good hint at the supply and demand nature of the market. So it looks like we are currently potentially entering a supply run. We just had a good amount of market buying. So it seems like many traders who wanted to buy have likely already bought, and we're at short-term resistance here. So I'm expecting with this that price is going to begin to move downward. And if I wanted to actually fill my limit buy order because I believe that this is an ascending triangle, price is going to move upward, I'm not market buying at all. What I'm going to do is put my limit buy order just around here. And you might have the question, well, okay, this is all helpful, but what exactly do I do to get my order filled? Well, it's not an exact, science of put your buy order 0.2% below current bid. No, what you actually want to do is just get a feel for this and practice it a lot and just watch the market, watch the order book, and you'll begin to notice these kinds of supply and demand dynamics. And if you can do that, then you can actually begin to get your buy orders filled before you begin to see demand pick up again. Okay, so this is just going to be this 20-minute video that was on supply and demand runs. Again, this Wednesday is going to be a live trading session accompanied by a question and answer. So that'll be pretty fun. And thank you for watching. And go practice the order book.